Circle's IPO just flipped Wall Street. What this means for your money? What if I told you a crypto company just made Wall Street history and it wasn't Bitcoin, Ethereum, or even Tether? This one moment could be the beginning of the next financial revolution, and it's already put $50,000 in some investors' pockets on day one. Welcome to Stock Symbol Selects, decoding the money moves shaping our future. Last week, a company named Circle, yes, the firm behind the stablecoin USDC, quietly put off one of the boldest IPOs of the decade. It listed on the New York Stock Exchange at a $3 billion valuation and rocketed up 230%. What does that mean? If you had been lucky enough to get 1,000 shares at IPO, you could have made over $50,000 in a single day. But here's the key. This isn't just another tech company. This is the first publicly listed stablecoin company in the world, and that changes everything. So today, let's dig into why this seemingly low-key stablecoin firm has received so much support and hype from the capital markets. Simply put, Circle is the company behind USDC, the world's second largest stablecoin, with a market cap of over $60 billion. Some of you may be wondering, what is stablecoin? Here's an easy analogy. Think of old-fashioned U.S. silver certificates. They weren't silver themselves, but can be exchanged for silver at any time, so their value was stable. USDT is like the digital version of a US dollar-backed silver certificate. 1 USDT equals 1 US dollar and can be redeemed at any time. Here's how Circle makes its money. When you trade your dollar for 1 USDT, Circle takes your dollar and invests those dollars in short-term US Treasury bonds. The company earns the interest difference, the spread, with over $60 billion invested. With over $60 billion in reserves and a 4% plus interest rate environment, Circle can generate more than $2 billion in interest annually. After operating costs, Circle reported a net profit of $157 million last year. The beauty of this model is that there's almost no credit risk. Each USDC is backed 1-to-1 with dollars, mostly invested in ultra-safe US Treasury bonds. Why did Circle's stock price skyrocket? Circle's IPO timing was perfect, riding three massive tailwinds. Favorable policy shifts. Since Trump returned to the political stage, the U.S. government has taken a much friendlier stance towards crypto. It even passed its first nationwide stablecoin regulation bill called Genius, which has just been past Senate voting stage, now just waiting for House approval. That's a game changer. Explosive market demand. The monthly transaction volume of stablecoins now exceeds $4 trillion, more than Visa and MasterCard combined. Major global banks like JP Morgan, Standard Chartered, and Japan's SMBC are all getting involved. Even Cassie Wood has invested $150 million into Circle stock. Scarcity and first move advantage. Circle is the first stablecoin company to go public, a historic moment. It's like Amazon being the first e-commerce company to IPO. The significance is huge. However, there is a hidden risk. Circle's profits depend entirely on U.S. interest rates. If the Fed cut rates, Circle's income could drop drastically, possibly by half. That's why many analysts are cautious about its long-term growth prospects. Circle may be number 2, but the number 1 spot is held by Tether USDT with a market cap of $120 billion, twice Circle's size. Another strong new competitor is USE, a stablecoin backed by the Trump family. It already has a $2 billion market cap, ranking 7th globally. The biggest threat, however, comes from traditional banking giants like JP Morgan's JPM Coin, which has already surpassed $2 billion in stablecoin transaction volume. More banks are testing their own stablecoins. These players have more capital and established customer bases. Here are a few investment highlights. Regulatory edge. Circle holds license in Singapore, the EU, and elsewhere. As a public company, it will face stricter transparency requirements, rare in the crypto world. Growth potential. The stablecoin market is still growing fast, especially for applications like cross-border payments and DeFi. USDT's compliance advantage. Compared to USDT, USDC is seen as more transparent and better regulated, giving it a chance to grab more market share. But there are also clear risks. It's highly sensitive to interest rate changes. The business model is relatively narrow. It faces increasing competition, and at about $240 per share and a $53 billion market cap, the PE ratio is 2,400, very expensive. So, what does this mean for investors like you? Circle's successful IPO is part of a large trend. Digital currency are going mainstream. For everyday investor, here are 3 takeaways. Pay attention to policy shifts. Crypto-friendly leadership, like Trump's, is reshaping the regulatory landscape. Understand the new economy. Stablecoins may seem simple, but their business logic and risk points need to be studied. Stay rational. Hype is high, but investing still comes down to fundamentals. Circle has a solid model, but it's not without its limit. Circle's IPO makes a turning point from the Wild West of crypto to a more mature, regulated digital finance era. It's not just a win for one company, but for the entire digital finance infrastructure. And one thing for sure, the digital dollar age is officially here. Are you ready? Who will ultimately win in this trillion-dollar market? That will depend not just on tech capabilities, but also regulatory strength and risk management. For most investors, this is both a challenge and an opportunity. Just remember, investing involves risk, meaning do your own research and due diligence and proceed with caution. But for those in it for the long game, this could be the next big opportunity. If you want more deep dive like this one, don't forget to like, subscribe, and hit the bell. And tell me in the comments, are you buying Circle? See you next time.